oil just tagged $100 and is above 100 now, but the market is not panicking. Brent crude price is above $100 per barrel, and we are basically back to escalation levels pre-ceasefire. However, the S&P is still rallying, Nasdaq is still holding up, and Bitcoin is still rallying. It just touched 79,000 as we speak. So what's going on? Why are markets rallying while oil prices are high and there should be pressure from the war? Well, that's because the taco trade is fully back. People know that whatever Trump says when it comes to ceasefire or escalation just means he's going to do the exact opposite in the next few days. So we will cover exactly the timeline that has happened even over the past 4 days. And that will show you why people are not panicking anymore. The only charts you need to watch now are the actual oil prices and the next inflationary prints, which can give you a sensible long-term signal on how to act on the market. So my general read on the market right now is still a lot of headwinds ahead, aka a lot of pressure, a lot of downward pressure ahead, not only because of this war, but also because inflation and its downstream effects on the Fed. And speaking on the Fed, Fed Chair Jerome Powell might be staying at his position for another 2 months because of a blockage on the confirmation of the new Fed Chair, Kevin Warsh. We will cover that in today's episode as well. And last but not least, let's take a deep dive on the Kelp DAO hack situation combined with our last coverage to give you the full picture of what is happening, why did this even happen, whose fault is it, and the liquid restaking crisis. Is there still trust in that sector, or should we all pull out our money from restaked Ethereum? And what does this mean for the future of DeFi? So we'll break that down in the end. So 3 topics for today. Let's get right into it. Okay, first of all, let's start off with price action. So I see someone says, David Lee says, don't you think BTC has already bottomed out? Would you buy now or wait? Thank you, sir. Always great show. So my stance right now is still that I give it a less than 50% probability for Bitcoin to have bottomed out at 61K. However, that's not a big level you need to try to guess so much. The way I like to think about it is this. So on our channel, on all the live streams, you see that ever since low 60Ks, we've been buying. We bought here, and basically when price was low, I made sure to tell people, hey, this is what you want to do today. Just buy Bitcoin in the low 60Ks. If it's within 60K, we have been DCAing, and if it's above 60K and near short-term resistance, you don't want to buy as much. And that's it. So we are in a bear market. Until proven otherwise, we are in a bear market. So where is the bottom? I think it's 40% chance, less than 40% chance that 61K was the bottom, because previous bear markets, all 3 of them touched the 200-week SMA in 2022, in 2019, 2020, and in 2015. So it's just kind of probabilities. Could it have bottomed? Yes. But you don't want to use that signal right now. Why? We repeated this multiple times before. Bitcoin is not cheap at the current point compared to the bear market, because the cheap price in the bear market is the 200-week SMA down here. That's at 60K. Whereas the confirmation of the bull market is above at 96K. So we are at 79, right in the middle of this range. It's the most dangerous to try to make a very large size bet to say, hey, Bitcoin has bottomed or not. Because if you're wrong on the bottom call, you risk losing all of this from 79K to 60K. Whereas if you want to bet on a full confirmation, you need to wait for another 20% pump to confirm that the bear market is over. So there is no action I can tell you. I can't tell you definitively if Bitcoin has not bottomed. I just believe it's less than 50% probability. That's why I say it's the less probable thing. And I believe we should have a low coming in the 50Ks. But once it gets there, I don't want to count anything lower as a target, because below the 200-week SMA you buy, you have always made money in the last 3 bear markets. And that's the only practical thing I can give you. So I can't really agree or disagree with you. Right now, it's no point in trying to argue whether 61K was bottom or not. We have equal chance to be wrong, to be fair. And but even if you believe 61K was the bottom, unless you believe it with like 80-90% probability, which I think nobody really thinks that right now, your risk is high. Because if you're like 60% short, then that means 40% chance that you lose like 20-25%, even just to go to, you know, the typical bear market low. That's a meaningful percentage now. So got to be careful. You don't want to try to speculate on the bottom price. Now, let's cover price action. So what is the taco trade and why is it happening right now? We covered the range of panic versus calm in the Brent crude price as a signal before. So above $100 in Brent crude, that means Strait of Hormuz is closed, oil supply is under pressure, and people are not happy. Markets are under pressure, and we are currently above 100. So markets should be panicking. However, it is not yet. Why? Because Trump said that, well, he wanted to close off, he has blocked off the Strait of Hormuz from Friday. And over this past week, from last week to this week, there has been something like 20 ships that has been turned away from the Strait of Hormuz. However, today, he came out and said that although we are capturing vessels, we're not letting people through. We do, however, want to extend the ceasefire indefinitely. So really mixed signals here. Trump, on one hand, doesn't want any oil tankers to go through, but on the other hand, doesn't want to fight anymore. So again, this is the taco trade. Trump always chickens out. So this means the market is pricing in short-term volatility, but long-term, for there to not be any dramatic fighting anymore, because we actually have indefinite ceasefire. So that's why the markets are looking okay. They think oil will stay high for a while, but at least it has topped out. We're not going to hit more facilities. It's disruption, and it's just how long the disruption takes. So oil price probably won't get above, 115 anymore. It'll chop in this range. And you see this on the oil price charts, especially for futures. So take a look at this. Here is the, where's my oil price futures? Oil. PCE, oil. Here, this one. The Brent crude spot price is roughly 100 right now. But if you look at the next few months, people are pricing in a very slow decline. But for the oil price to slowly come back down until end of the year, where it should return to normal below 80. So below 80 is pre-war levels. So what does this mean? This means escalation probably priced out now. Ceasefire indefinite, very good. Sentiment is turning around. However, oil price will stay at least above 80 and probably above 100 for now, and come all the way down, but very, very slowly over the next like 2 quarters at least. So what does that mean for the markets? Well, in the short term, markets are fine. People will not take Trump's words anymore. Even if Trump says, oh, we're going to hit Iran, who's going to believe that? Nobody will believe that anymore. So the risk of war is pretty much taken away now. Taco trade is in full effect. If Trump says we're going to hit Iran, markets might rally because they know that it's a short-term panic. It'll be reversed in like 2 days. The long term, however, is uncertain, is very unclear, and I think it's bearish. Why? So the oil prices because it will stay relatively high, at least above 80. And looking at the futures pricing, it'll be something like very, very slow decline over the next 6 months. What's going to happen is inflation will be high. So all of that inflationary pressure will get reflected in the next core PCE prints. We've said this before. The core PCE print is what the Fed looks at to compare their inflation target versus the real inflation year over year target. So this number, the next one is coming out on April 30th, just in 8 days. And this should be a little bit higher than last month. So the historical math of it is like this. So each, let me bring this up. I have each 10% oil price increase leads to about 0.04 percent of increase in the core PCE, which means what? Which means we are likely to see something like 0.15 to 0.2% of core PCE increase, but very slowly over the next at least 6 months. So because the core PCE numbers only go by roughly 0.1 percentage point, that means the next core PCE, the next 6 core PCE prints, some of them will be slightly higher, some of them will be equal, but it will not drop. And we are nowhere close to the Fed's target. So the Fed's target is something like 2.7% by the end of the year, which we're not going to get to. So what does that mean? That means rate cut odds, very bad for the rest of this year. And there's high uncertainty. Some months the core PCE will be the same, so the market will be fine. But some months the core PCE will tick up because the number kind of got over to that 0.1 percentage point, and markets will panic a bit. So the Fed, in response to this, has put out one new policy response. This is actually very, very recent, 5 days ago. One transitory shock after another. This is specifically addressing the oil shock and its effects on inflation. So the Fed wants to say that oil shocks are transitory and the inflationary effects will pass. But that means they just won't hike rates. Okay, they won't see it as a long-term effect, but at least in the short term, inflation is there, so they have to wait. So the market is not reacting to any of this. The market is just saying, very simply put, Fed rate cuts in 2026. This year, most likely we will have no rate cuts, 34% chance, 30% chance we have 1 rate cut, 18% chance we have 2 rate cuts. This is what Polymarket says. And if you look at the traditional, CME Fed Watch tool, it says about the same thing. By the end of the year, we have, you see here, 71% chance this is no rate cuts, 24% chance 1 rate cut. So it's even lower if you look at market analysts, macro analysts. So there you go. The headwinds for this year are real. Inflation will slowly seep through to the core PCE prints. And that's why the short-term rallies, while they're nice, Trump says that Trump says something and then the market does the opposite. But you got to be careful. Oil price is not going to come down very easily. Okay, we have indefinite ceasefire now, but that also means we have basically indefinite blockage of the Strait of Hormuz. And you got to play it one step at a time. And especially with Bitcoin at 79K right now, again, it's not cheap. It's 20-something% above the bear market typical cheap level, 23% above that, and it's 22% below the bull market confirmation. There's nothing to do here. If you hold Bitcoin, you hold. If you don't hold Bitcoin yet, you have to wait. That's That's the only logical thing. You either wait for it to fully confirm above here and you buy higher when the bull market is confirmed, or you wait till Bitcoin is cheap again, at least in the low 60Ks. I don't want to have any more discussion on, oh my God, 61K is the bottom or low 50K is the bottom. I believe low 50Ks, I will feel comfortable saying, hey, you buy here, it's the right call. But at the moment, no, I can't tell you that it's the right call to be buying here. I can only tell you what I just said. So, okay, that's on Bitcoin price action in follow-up to the headwinds coming up. Next, let's cover the Fed situation when it comes to Kevin Warsh and Jerome Powell. So, long story short, there has been a new hearing that happened 2 days ago for the new Fed chair, Kevin Warsh, to be confirmed. But this was blocked. So here is the meeting. Trump's new pick for the Fed chair to have confirmation next week. This was talking about 2 days ago. And when this happened, they had a lot of discussion about whether Kevin Warsh is going to be Trump's puppet and whether there will be independence in the Fed after he comes in. So Senator Tillis has blocked the confirmation of Kevin Warsh. This is what I read. Yes. So he says, I do want to support you, but they need to get through the investigation of Jerome Powell first. So currently, if you remember, Trump has an ongoing DOJ probe into Jerome Powell in their, unnecessary spendings for renovations at the Fed building, which happened to be something like $2 billion that they've spent on renovations. Kind of crazy, but nonetheless, it is blocked. So Kevin Warsh will be the new Fed chair, but it doesn't look like he can come in on May 15th. So there is a new market on Polymarket that doesn't have a lot of volume here yet. So you got to wait for this. But at least from the market analysts, most people agree that by May 15th, Kevin Warsh will not come in. Kevin Warsh will not be confirmed. Most likely odds is the June FOMC meeting, June 16th to 17th, Powell will likely still be the Fed chair. So why is this important? Before this confirmation, this drama, Kevin Warsh was supposed to be the new Fed chair starting May 15th. And that means he will lead the next FOMC meeting on June 16th and 17th. But if the block stays and Kevin Warsh doesn't get confirmed, Jerome Powell will still lead the next FOMC meeting. So that means June 16th, 17th, there will be no chance of a rate cut, okay? Because we know Powell doesn't want to cut. He's certainly not going to cut at the final time that he is the Fed chair. He's obviously going to keep the same thing, his same legacy that he's kind of steadfast. So that further decreases the odds of a rate cut in the June FOMC meeting. Now, to be fair, there basically was already no chance of a rate cut in the FOMC meeting in June. If I can see this Fed decision. Yeah, here you go. Fed Polymarket decision in June. You see here. But this jumped up. Actually, no, this just continues to climb because it's already at 93%. So Kevin Warsh not going to have any chance of, making any sort of dovish statement to help the market in the June FOMC meeting if he's not confirmed. Currently, it looks like he will be the chair of the Fed starting from the July meeting. So the July meeting could change. Currently, it's 82% chance that there will be no rate cuts. But if Kevin Warsh gets confirmed and he says some things more positive, then we could have these odds increase for rate cuts in July, and that could be good. So you have to watch this confirmation. The sooner we can have Kevin Warsh come in, the longer time period that we can have for him to make statements and for him to plan his year ahead. And certainly we need Warsh to be confirmed before August, before the Jackson Hole event, because that's when he can actually give his big speech. If Warsh doesn't get confirmed by mid-August, it'll be very bad for the markets. That means he's not going to have much of a chance to lay out his softer monetary policy if he wants to do so, if he wants to do Trump's bidding, which is what the market wants, right? So there you go. Currently, the market didn't reprice any of this yet because we know that in June, there's not going to be a rate cut. So whether it's Kevin Warsh or Jerome Powell, doesn't really matter. But we need to see this block being resolved. So this is Kevin Warsh. You want to see him as the Fed chair as soon as possible because he is the one that can pivot the policy, and he needs a lot of time to tell people, to warm people up to the idea of it, if even he is going to pivot the policy. Now, a little bit more on what he said, and I want to bring up to you guys. So he did make a lot of statements. So he obviously defended himself in saying that he is not Trump's puppet. Let's see. Yeah, so Kevin Warsh, he'll indirectly downplay Trump's influence and argue that the Fed's autonomy is not particularly threatened when elected officials weigh in on rates. And there's something more explicit here I want to see. I was reading earlier on this. Maybe in this one here. Let's see, blah, blah, blah. Kevin Warsh confirmed. So there is a very interesting question around Kevin Warsh's personal finance, because he would become the wealthiest Fed chair if he was confirmed, thanks to his ties to the White House, thanks to the appointment, of course. There is something that I'm just going to bring up from my notes here. So Kevin Warsh's policy basically can be summarized as this. He actually does not want more QE. He wants a smaller balance sheet. So he has argued for years that the Fed is too large in its balance sheet, and he wants QT to come faster and asset holdings to be materially lower. We need to see if this is true in his full policy language after he gets confirmed, because that could be very bad for altcoins, for high risk investments like the Russell 2000, the low cap stocks and altcoins. And he wants to give less forward guidance, meaning he wants to react. Okay, he wants to basically have the Fed just do the same thing, not say much until the system breaks. And then when it breaks, they react very decisively. And he even wants to end post-meeting press conferences. So for the last 15 years, you see all the chairs, mainly Jerome Powell, he has to answer all these questions. And that's the big meeting minutes when he answers the reporters, that he gives hawkish or dovish statements. Kevin Warsh wants to end all of that. Which means basically he just comes out and says what the Fed is doing, and then that's it. So a ton of big impacts to watch after Kevin Warsh comes in. It could be short-term pain, to be fair, but long-term, you can't deny that he is, heavily linked to Trump. He was appointed by Trump. So let's see. Okay, so the confirmation and the transition from Powell to Warsh is going to be a very big event for all of the markets. So what to watch next? First, you need to watch when the DOJ can end their probing into Powell. This is the main argument that the senators are using to block Kevin Warsh's confirmation. And then Warsh will have his next hearing in the June to July window. In that hearing, there could be another vote to confirm him, basically. And in this window, you have to see, okay, when is the hearing? Is it going to be after the June 17th FOMC, but hopefully before the July 29th FOMC? So that's the date window here. If it's between here, that's fine, because we want Warsh to come in before July, so he can have at least one FOMC to make a statement before Jackson Hole. Otherwise, if he comes in after July 29th, that means Powell stays for 2 more FOMCs, which will be bearish for the markets. Okay, and that's it. That's for Kevin Warsh, Jerome Powell. Bit of drama here as Powell will stay in for next couple months, couple more months longer. Finally, I do want to touch upon the Kelp DAO situation. So we already covered this on our last live stream. You can go ahead and watch it right here. $292 million hack threatening all of DeFi. What should you do next? So a quick recap. Over the last weekend, so Saturday, Sunday of this past week, April 19th, Kelp DAO was suffered of a hack for $292 million. This is not based on their core DeFi smart contracts. Rather, it's for their restaked version of Ethereum that goes through the LayerZero bridge. And in short, Kelp DAO is a restaking provider for Ethereum. You can stake Ethereum through Kelp DAO to get more yield, and you can bridge that to other chains to get even more yield. Obviously, that creates more risk, and in this case, it led to a big event. So they do this bridging through LayerZero, which is a very popular project you guys probably have heard of. So LayerZero bridges their tokens from Ethereum to Unichain and to Arbitrum, if I'm not mistaken. And through that bridging process, it looks like 2 things went wrong. So number one, Kelp DAO only used a one-of-one DVN setup. So basically, they have one node that is a validator that oversees the bridging, confirms that the assets are real on one hand and releases the assets on the other chain. So this is obviously not safe. You need to have multiple bridge nodes as validators. But also, Kelp DAO came out and with their own incident response, and basically they said in here that yes, we should not have used one-of-one DVM, but LayerZero's nodes were the ones that were compromised. So 2 RPC nodes hosted by LayerZero were compromised, which led to a DDoS attack that led to this, one-of-one validator to be compromised in the first place. So both sides are at fault here. The bridge provider LayerZero got compromised on some of their nodes, and these nodes were the main nodes that Kelp DAO chose to use to secure their one-on-one, setup. So, bit of a drama. Neither side wants to claim, that they're responsible for this. In reality, both sides are really here. This thing should have never happened. A bit of thing to add on top here is that do I have that on here? I don't have that on here. So Arbitrum did something very interesting that I felt kind of weird about, which is that Arbitrum froze $71 million in Ethereum tied to the Kelp DAO exploit. This is not a typical, like hard fork of the chain where everyone agreed. It's a 12 out of 15 multisig by the Security Council. So obviously, this is a good thing. It saved people's money. DeFi operators, $71 million of it were saved. However, is this decentralized? So technically, if they really wanted to, okay, they can freeze the chain if they really wanted to. 12 out of 15 people voting could have done it at any time. And this brings up more question about the chain as well, because you could have never done this on Ethereum mainnet. Okay, this has been tried and tested before, which led to the Ethereum Classic, DAO hack and hard fork. So typically, a truly decentralized blockchain needs to have a hard fork in order to do this. This was not a hard fork on Arbitrum. This is a one-time action of a group of people in a room just got together and said, "Hey, let's do this," and then they did it without having to consult any user of the chain. So it's kind of weird. And yeah, there is definitely a decentralization question here. I don't know if this is the right thing to do here necessarily. It's good for Arbitrum users. Technically, okay, if you have assets on Arbitrum, maybe it's a little bit safer than like other layer 2 chains, because like if you lose some of the assets, they can freeze that asset and give it back to you without the hackers taking them. But on the other hand, the chain is a little bit more centralized than we thought. How is this very different from Binance Smart Chain, BNB chain? It kind of isn't. It's a layer 2, sure, but it's just like a layer 1. So there you go. A little bit of thing that I wanted to bring up as a follow-on, that question that we should watch out for when talking about this kind of stuff in the future. Now, what should people watch out for next? So on the LayerZero side, you have to watch for other protocols that currently use LayerZero's OFT standard, omni-chain fungible tokens, to bridge their tokens across chains. So what does this mean like practically? So personally, I don't use anything out of Ethereum mainnet for like large amounts of DeFi, because it's just not worth like extra 2%, 3% yield. Not worth it. Even on Arbitrum, no. I would much rather just keep it on Binance if I'm going to go to a layer 2 chain instead of Ethereum, because Ethereum mainnet versus any other chain, using a bridge is a big security difference. Number one difference. If you want to use it, you have to make sure that if they're using LayerZero, that they're not using a one-of-one setup. They have to use multiple validators to secure their bridge setup. This is kind of obvious, but apparently we have to check now. If you look at any sort of assets that are bridged across chains. Now, on the liquid restaking token side, so specific to this bridged version of Ethereum, this RS-ETH, when you touch any of these, like RS-ETH on Kelp, Renzo's Easy ETH, Puffer, EtherFi, Mantle METH, there are attack vectors always. And that's mainly the restaking provider and the bridge that they use, because typically they work multi-chain. You have to be careful. So personally, I don't use any of these. I used to have some on the METH vault, just directly deposited on Bybit, but I don't even have that anymore. Nowadays, what I consider safe, quote unquote safe, is ETH. Okay, if you just hold ETH, that's secured by the consensus of Ethereum mainnet, that's fine. Wrapped ETH is just as safe as Ethereum because it does nothing. It just deposits Ethereum and mints ERC20. And this has worked for what, like 11 years at this point. Wrapped ETH has never failed because it's built into Ethereum. So it's pretty much just like real Ethereum. And then I use wrapped Bitcoin, which has never been hacked before because it's fully centralized custodian. Okay, there is no DeFi portion of it that's secured by multi like on-chain stuff. And I use Coinbase ETH because again it's fully centralized. Coinbase Bitcoin. If you want to use other forms of ETH, like you can use maybe Coinbase ETH. I think there is one. But I don't use any of these liquid restaked ETH. I don't even use wrapped staked ETH using Lido because the extra, 2% yield, not worth it. 3% versus 5%, you're giving up too much security risk there. So don't do it. I don't like doing it. If you use Aave, or MakerDAO or Compound, or these are the 3 I use. I still have money on them. These have never failed. Even during this situation, is there a bank run? Yes. People wanted to withdraw all of their wrapped ETH because of the pool of wrapped ETH versus liquid restaked ETH from Kelp. That leads to not a drain, but just a lot of people withdrawing money from that pool because the hackers drained all of that pool. Okay, so if you have wrapped ETH in there, it's stuck for a while until Aave decides how they're going to cover it. They have enough money to cover it in their umbrella insurance and in the staked Aave vaults, but it takes time, and that's why people took their money out. But the smart contracts are totally safe. So I still use on-chain DeFi. How do I use it? I use it on Ethereum mainnet only, and I use native Ethereum, wrapped Ethereum, or wrapped Bitcoin or Coinbase Bitcoin against USDT, USDC. These are either completely native to Ethereum, or they are completely centralized and with custodians that have been running for 10 plus years. And for that side of DeFi, I think it's still safe, but I don't plan to bridge anywhere. I don't do any looping. I don't do any of this restaking stuff. I think the extra yield there is not really worth it. If you do it, it has to be very high yield, and you have to know, hey, I'm just depositing money here to farm for 1 month. But for anything that you plan to park for 6 months, 12 months, you want to, have a very passive lending position, you should not use any of these other types of assets on other chains. That's my opinion. Okay, so that's a bit of practical advice for you guys on takeaway of this Kelp DAO hack. I know a lot of people, got spooked and they want to withdraw all their money from Aave, but you are only under pressure if you have wrapped ETH in the RS ETH pool mainly, and if you supply the wrapped ETH, if you borrow the wrapped if you borrowed against wrapped ETH, you're fine. And if you borrowed against stablecoin, or if you supplied stablecoin, you're fine because it's not related to this Kelp DAO restaked ETH at all. It's not the same pool, so you're okay. Your stablecoin are never going to be, taken away and then used to pay back other people's bad debt. That's not going to happen. Okay, so yeah, a bit of update on the Kelp DAO hack, and especially in the bear market, you want to be extra safe. So for most people, just hold Bitcoin on native Bitcoin, hold ETH on native ETH, and if you want to do like long-term DeFi lending, borrowing, just do it the way like I described, and then you're good. Because I've been doing that for this entire bull and bear market, and it never failed. So price went up a lot, it's fine. Price drops down, it's fine. Even during 1010, it was fine. And this situation, again, it's fine. My same wrapped Bitcoin, Coinbase Bitcoin vault that I have on there that I borrow against, I borrow USDT, USDC against it, totally fine. So there you go. That's the way I like to use on-chain DeFi. Before I go, make sure to subscribe to the channel so you don't miss our future live streams, and follow me on X at virtualbacon for day-to-day alpha clips and summaries of our research before we cover them on live stream. That's it for this video. Thank you guys for watching, and I will see you on the next video and the next live. Cheers. Bye-bye.